What is happening in the markets right now? The pace of change is insane, and if you're not plugged in, you're missing out. We've got seismic shifts, strategic moves, and signals that could redefine your investment game. Get ready, because the Bitcoin Bulletin is live, and we're diving deep into the stories you need to know. From game-changing indicators to bold pronouncements from industry titans, this is your essential briefing. Don't blink, don't look away, your next big opportunity could be unfolding right now. We're breaking down the critical data, the insider whispers, and the expert takes that will shape your portfolio. Let's get into it. First up, are we looking at a golden opportunity in Bitcoin with a triple buy signal flashing? We'll tell you exactly what that means and why it matters. Then, a familiar face is back, hinting at more big moves. Could this signal a major market shift? We're also exploring how everyday investors can play the long game with smart strategies. And finally, is the landscape changing as investors consider a major pivot? All that and more, coming up on Bitcoin Bulletin. Make sure you're subscribed, and the bell is on so you don't miss a single update. Bitcoin's triple buy signal is now the time to buy the dip. The market is buzzing with anticipation as Bitcoin presents what some analysts are calling a triple buy signal, a confluence of technical indicators suggesting a potentially significant upward movement. This development has ignited discussions across investor communities about whether this is the opportune moment to capitalize on a dip and increase holdings. The concept of a triple buy signal isn't a standardized technical term, but generally refers to multiple distinct bullish indicators aligning simultaneously, reinforcing the possibility of a price surge. For Bitcoin, this could involve a combination of moving average crossovers, RSI, relative strength index, patterns, MACD, moving average convergence-divergence trends, or specific chart formations that historically precede price increases. When these signals appear together, they can create a powerful psychological effect, encouraging both retail and institutional investors to enter the market or expand their existing positions. The allure of buying the dip, purchasing an asset after a price decline, anticipating a recovery and subsequent rise, is a core strategy for many in volatile markets like cryptocurrency. A triple buy signal amplifies this strategy, suggesting that the current price point might be particularly attractive before a potential rally. Analysts are scrutinizing Bitcoin's price action over recent weeks and months, looking for these specific patterns. For instance, a golden cross, where a short-term moving average crosses above a long-term moving average, is often seen as a bullish signal. If this is accompanied by strong buying volume and positive momentum indicators, it could form part of this triple confirmation. The implications of such a signal are far-reaching. It could attract new capital into Bitcoin, potentially driving up its price and positively impacting the broader cryptocurrency market. Investors who have been waiting on the sidelines might see this as the confirmation they need to invest. Conversely, some traders remain cautious, emphasizing that technical indicators are not guarantees and that broader market sentiment, regulatory news, or macroeconomic factors can still influence Bitcoin's trajectory. The debate is heating up. Is this a genuine opportunity to buy low or a potential trap before further volatility? The coming days and weeks will be crucial in determining whether these signals hold true and if Bitcoin embarks on a significant upward trend. As the market digests these potential signals, discussions are rife on social media and forums about whether this is the definitive entry point for a new bull run or just another temporary upward fluctuation. The sheer volume of chatter indicates a high level of interest and cautious optimism. But is this the only major development shaking up the crypto world? Stay tuned, because we're about to break down another significant announcement from a major player in the space. Saylor releases Bitcoin tracker information again, possibly hinting at another increase in BTC holdings. Saylor, a prominent figure in the cryptocurrency space and CEO of MicroStrategy, has once again stirred the market by releasing information related to the company's Bitcoin holdings. This move, often interpreted as a precursor to further accumulation, has led many to speculate about an imminent increase in MicroStrategy's already substantial Bitcoin reserves. Saylor's public statements and disclosures have consistently served as a barometer for institutional interest and confidence in Bitcoin. His recent assertion that Bitcoin is still on sale at a discount directly communicates his bullish outlook and suggests that he perceives current market prices as an attractive entry point for further investment. This statement is particularly noteworthy given MicroStrategy's aggressive Bitcoin acquisition strategy over the past few years, where the company has consistently added to its holdings, often during periods of market volatility or price dips. The market closely watches MicroStrategy's actions because its significant Bitcoin treasury makes it a bellwether for corporate adoption of the digital asset. Following a pattern observed in previous instances, Strategy, as MicroStrategy is often referred to in this context, tends to disclose information about increasing its Bitcoin holdings shortly after relevant news or market events. This pattern suggests a deliberate and strategic approach to accumulation, potentially leveraging market fluctuations to maximize their acquisition efficiency. The market's reaction to Saylor's pronouncements is typically swift, with his comments often correlating with short-term price movements or increased trading volume for Bitcoin. Investors and analysts interpret these disclosures not just as a reflection of MicroStrategy's financial strategy, but also as a strong signal of conviction in Bitcoin's long-term value proposition. The implication of Bitcoin is still on sale at a discount is that Saylor believes the current market price does not fully reflect Bitcoin's intrinsic value or future potential, making it an opportune time to acquire more. This could mean that MicroStrategy is preparing to deploy more capital towards Bitcoin purchases, potentially through its corporate treasury or other financial instruments. Such an accumulation by a large entity like MicroStrategy can have a ripple effect, bolstering market sentiment and encouraging other institutions to consider similar strategies. The transparency, albeit strategic, with which Saylor communicates these intentions provides a unique insight into the mindset of a major institutional holder, influencing the broader narrative around Bitcoin's adoption and stability. The market will undoubtedly be watching for any official filings or announcements that confirm an actual increase in MicroStrategy's Bitcoin assets, which could provide further momentum to the cryptocurrency. The community is abuzz with speculation, with many believing Saylor's comments are a direct signal that MicroStrategy is preparing to buy the dip, further solidifying their position as a major Bitcoin holder. But while some are doubling down on Bitcoin, others are looking at different opportunities. Are we seeing a shift in investor preference? Bitcoin ownership distribution and the power of fractional holdings, strategic entry points for retail investors. The landscape of Bitcoin ownership is evolving, with a growing emphasis on the strategic advantages of fractional holdings for retail investors. As Bitcoin continues to mature as an asset class, understanding how ownership is distributed and how smaller investors can effectively participate is crucial. Traditionally, acquiring a full Bitcoin was a significant financial undertaking, potentially limiting access for many. However, the advent of exchanges and platforms that allow for the purchase of fractions of a Bitcoin, down to the Satoshi, 0.00000001 BTC, has democratized access and opened up new strategic entry points. This ability to buy small, incremental amounts of Bitcoin is particularly powerful when combined with consistent investment strategies like dollar-cost averaging DCA. DCA involves investing a fixed amount of money at regular intervals, regardless of the asset's price. When applied to Bitcoin, especially during periods of volatility, it allows investors to acquire more Bitcoin when prices are low and less when prices are high, effectively averaging out the purchase cost over time. For retail investors, this strategy mitigates the risk associated with trying to time the market perfectly, a notoriously difficult task. Fractional ownership makes DCA highly practical, enabling individuals to build a meaningful Bitcoin position without needing substantial upfront capital. The distribution of Bitcoin ownership is a dynamic metric. While a significant portion is held by early adopters and large institutional investors, the increasing availability of fractional ownership is steadily broadening the base of retail holders. This wider distribution can contribute to greater market stability and decentralization over the long term. Analysts point out that the power of fractional holdings lies not just in accessibility, but also in the psychological barrier it removes. Owning even a small fraction of Bitcoin can foster a deeper engagement with the asset and the broader cryptocurrency ecosystem. It allows individuals to participate in the potential growth of Bitcoin without the prohibitive cost of acquiring a whole unit. Furthermore, understanding the distribution of ownership can inform investment strategies. Knowing that a large percentage of Bitcoin is held by long-term investors, often referred to as HO dealers, can provide confidence in the asset's resilience. For new retail investors, the key is to approach Bitcoin with a clear strategy, leveraging fractional ownership to implement disciplined investment plans like DCA. This approach allows them to benefit from Bitcoin's potential upside while managing the inherent risks associated with its volatility. As the market matures, the narrative around fractional ownership is likely to grow, empowering more individuals to participate in the digital economy and build wealth through strategic, small-scale investments in Bitcoin. This shift towards fractional ownership is empowering everyday investors, allowing them to participate in Bitcoin's growth story through consistent, small-scale investments, a strategy gaining significant traction. Now, as we've seen strategies for Bitcoin, let's consider if the tides are turning for another major player in the crypto space. Is there a significant shift happening? The shift from Bitcoin to Ethereum, a strategic move for long-term crypto investors. A fascinating narrative is emerging in the cryptocurrency market concerning a potential strategic shift among long-term investors, a move from Bitcoin to Ethereum. As the digital asset landscape matures, investors are continually evaluating the relative merits and growth potential of different cryptocurrencies. While Bitcoin has long been the undisputed king of crypto, establishing itself as a store of value and a digital gold, Ethereum is increasingly being recognized for its utility and expansive ecosystem, positioning it as a potential leader in decentralized applications, dApps, smart contracts, and the burgeoning world of decentralized finance, DeFi, and NFTs. This potential pivot isn't necessarily about Bitcoin losing its value proposition, but rather about investors seeking to diversify their portfolios or capitalize on Ethereum's unique growth drivers. Ethereum's recent upgrades, particularly the transition to proof-of-stake (PoS) with the merge, have significantly enhanced its scalability, energy efficiency, and economic model, making it more attractive to a broader range of investors, including those concerned with environmental impact and yield generation. The Ethereum network serves as the foundation for thousands of dApps, powering everything from decentralized exchanges and lending protocols to gaming and metaverse projects. This vast utility creates a strong network effect, where the more developers and users engage with Ethereum, the more valuable the network becomes. For long-term investors, this utility-driven growth narrative can be compelling. They might see Ethereum as having greater potential for capital appreciation due to its expanding use cases and ongoing development roadmap, which includes further upgrades aimed at improving transaction speeds and reducing costs. Conversely, Bitcoin's primary narrative remains that of a digital store of value, often compared to gold. While this is a powerful and established use case, some investors may feel that its growth potential is more limited compared to a platform like Ethereum, which is actively fostering innovation across multiple sectors. The decision to shift from Bitcoin to Ethereum or to allocate more capital to Ethereum is a strategic one that depends on an investor's individual goals, risk tolerance, and market outlook. It reflects a growing sophistication in the crypto market, where investors are moving beyond a singular focus on Bitcoin to explore the diverse opportunities presented by other leading digital assets. This trend, if it continues, could lead to a reevaluation of market capitalization dynamics and the perceived roles of different cryptocurrencies in the future financial landscape. It highlights the dynamic nature of the crypto space, where innovation and technological advancements can quickly alter investment theses and market leadership. The long-term implications of such a shift could be profound, potentially reshaping the hierarchy of digital assets. This potential migration signals a maturing market where investors are increasingly valuing Ethereum's utility and ecosystem growth for long-term potential, moving beyond Bitcoin's store of value narrative. And that wraps up our deep dives for today. But before you go, let's hit the highlights one last time. All right, let's do a quick recap. Bitcoin might be flashing a triple buy signal, hinting at a major opportunity. Saylor is back, dropping hints that MicroStrategy could be increasing its Bitcoin holdings again. Retail investors are finding new strategic entry points through fractional Bitcoin ownership. And we're seeing a potential shift as investors consider moving from Bitcoin to Ethereum for long-term gains. That's a lot of action. If you found this update valuable, smash that like button, subscribe to Bitcoin Bulletin for daily insights, and ring that notification bell so you never miss out. And hey, let us know your thoughts in the comments below. For more updates, follow us on all social platforms. We'll see you in the next one.